Good evening, I'm Giuseppe Basile, I'm the Algorithmic Trader you can find at the website www.fibstalker.com. I also post regularly on Twitter using the Fibstalker nickname. Good evening, today is Monday, March the 17th, 2014, and it's 15 minutes to 10 p.m. time in Toronto, and in this video I'm going to review for you the three Japanese majors, the US dollar versus Japanese yen, the euro versus Japanese yen, and the pound versus Japanese yen. This is a daily update I provide on my blog during the week, and it follows up on the weekly update I only distribute to my subscribers. So if you want to get the actual update in the weekend, just subscribe the newsletter, and that's for free. So those who follow me know that starting from the US dollars versus Japanese yen here, and this is the daily chart, I've been looking at this level of support, which has been respected now 4 times, and as you can see, today in the morning we had participation on the upside again, and this was sufficient to actually break the sequence of measure move lower that we saw in the last few days. So I will adjust the chart here, and then I'm going to show you first of all the sequence here. Now the first part of the sequence is very clear on the 4-hour chart, which is what you are seeing at the moment. And you will remember that last week we also traded this first 103.34 level, and I mentioned that we could continue lower into this first level of support. So congratulations again to those who took this trade. It's quite a good reward to risk here. And then we had just a continuation from here, from this first 103.34 level. We had a continuation lower highs to lows here, and again price went into the first target, and again we traded, continued to trade the sequence here, and you didn't have to risk at these subsequent trades once you are well placed on the first trade. As you can see, you can keep trading this market until you get to the target, and or the sequence of measure move fails here, as it happened here. Now let's forget what happened after that. I mean, the trade was a very good trade. Then we had these conditions in the market. SP 500 probably pushed down all the forex pairs here. So I was looking for this retracement then, but then the 15 minutes was telling another story, and we always have to look at what the 15 minutes is actually trading. So one could think that the actual level anchor was actually this level here, but the market and program trading has not been using that level, and actually it has been using this level, because when we trace lows to lows we see that there was participation here. So of course we only could tell this after we saw this participation on the downside, but this is not the point. The point is that once we have identified the first move in the sequence, then we can reuse the same anchor, because program trading is going to use the same anchor, and we can trace from lows to lows here. And at some point we saw a violation of this level, and then the market, this could have been an entry with a stop below lows, and because it was on top of a support. The market then came to trade all the way halfway back, so this would have been another high probability trading here, and the market is now coming down, and this level of first target was never hit. So we are going to see what happens at this 101.53 if we get that, and if we still get support in this area, then actually we should actually trade the continuation higher here. So be very careful though. There may be level of resistance on top of price here. So in case price retraces all the way halfway back, this would be something very similar to this trade, but I would actually keep an eye on this level I gave you, 101.53. This is the level to watch. If we get there and we get a violation of the sequence of measure move on the 15 minutes, short on the 15 minutes, that's an entry into 102.01 and 102.27 here. Moving to the euro dollar versus Japanese yen. Again, all these Japanese yen majors found support today, and as we see from this market as well, is loading data. It's a little bit slow, so let's see. Here we go. We got our data for the euro versus Japanese yen. So we continue our analysis. As I said, all I was saying, all the this market found support, and the euro versus Japanese yen found support at this odd extension long. Now, there's no way we could anticipate this. On the daily chart, I traced this level after the fact. Still, this is relevant, and actually I also want to show you how you would be able to identify this level on the 4-hour chart here. You will remember that I provided a sequence of measure move, and the first one was this sequence. Although it broke price into 141.85, 141.25, and then I indicated the next level in the sequence. This was this level, and eventually this was also could also trace this level, and as you can see, the market actually respected this level and started moving lower. Eventually it broke this level, and by breaking this level it gave us the indication that there was support. So it's very important now to understand what is going to happen in this market. So this market has not traded the all the way halfway back where we would see short, and is not yet there. So if we retrace during the evening or during the night and tomorrow's morning, and we find support at 141.21, this is going to be a trade with a stop below 141.02, 141, and we are going to probably continue higher and challenge this level of resistance 142.12. However, if this trade first, and if the 142.12 trade first, and we break the sequence of measured move, then we have to be very careful because the shorts could be in place. So we have to be a little bit careful in this market, and the good thing to do is see how it's going to behave at this 141.20. Moving to the pound versus the Japanese yen, again also this market found support, and it found support at that level I've indicated yesterday. It broke down into this area of support, but eventually it came out of it, and let's see on the 4-hour chart what was the sequence, and very similar to the previous market here. We saw price actually never going to test that level, not a traditional measure move, but you will remember that during the week I've indicated another level, and this level was a lows to lows, and the reason for that is because he traded before and he kept trading, and bringing price into first and second target here. And once we saw the second target, and by the way, it traded really to the pip here, as you can see, and we traded again into the next level of resistance, 169.44, which brought price into 168.35. At that point, we had lows and we had a previous anchor, and we could actually also identify the next level of resistance. Now, when we got there, price did not find resistance at that level, but the price went above it, and then eventually we went to trade the first traditional long here, which is traced from highs to highs. As you can see, there was participation at these levels here, and this is an indication, and there is support. So there is now the possibility for this market to trade again into this level 168.77 of support here. And if tomorrow we find support at this level, then we're going to enter 168.77 with a stop below 168.55 here, and try to take a move higher into the first target, was 169.170 basically, and the second one will be 170.63. So it's a good opportunity here. Watch this market, because they could give very, very good trade on the upside, as they've found support at the moment. I hope this video is useful. I wish you a very good evening and a very good trading day tomorrow. This video is the second video for today. I'm gonna record another video for the other forex majors in a minute. Thank you very much for your attention. Again, thanks for sticking around, and chat to you soon. Bye bye now.